Alright, so welcome back to another video and GTFX. For those of you who don't know me, I am a Forex trader living in the Caribbean, and I decided to document my trading journey to share with you. Alright, so in this video we're going to be touching on what you need to learn to become a successful trader and consistently profitable. Alright, so before we begin, I just want to say that trading is not a get rich quick scheme. So don't come into it expecting to get rich in your first few months. Even though it's absolutely possible to get rich over time, the key is to treat it like a business. So you'll want to see consistent growth while staying in it for the long run, right? So now forex trading is not difficult to learn, but you need to know everything there. You don't need to know everything there is to know about forex before you become successful or consistently profitable trader. However, there are a few things you'll need to understand in order to be consistently profitable, and it would mainly be the mentality and knowledge, and we'll touch a little bit on the mentality and knowledge. First, the mentality. The first one is self-control. This is basically speaking about greed. If you're in a trade, for example, and you're seeing $10 profit, but you want to make like $20-$30 profit off of it, you need to accept what the market is giving you. If the trade is allowing you to maybe stay in the trade for another 20-30 pips, maybe give you 20-30 extra dollars, then stay in that trade. But if maybe the price is approaching market structure and you just want to stay in it or see what's going to happen, or maybe you're looking at price action and maybe you're analyzing a 1 hour candle and you saw that it closed with a reversal, that indicating that it's a reversal, and you want to stay in it, then you gotta learn some self-control. That's the first one. Second would be money management. This is very important because you need to understand this in order to stay in forex trading for the long run, because without proper money management, and risk management also comes into play when you talk about money management. It's basically it's leveraging yourself. You're affording or trading what you can afford, not because you have a $200 account means you can open a one lot size trade and just hope that it doubles the account. That's not money management. That's not risk management. You need to understand you're willing to risk 5% of your account, because if that trade goes against you, then it's just 5%. If you are willing to, if your aim of the end of the day is just 10%, then it's just 5%. You can lose one, you can lose 3 in a row, you can lose 5 in a row, and you're still going to be in it, because that's not going to be 100% of your account. But if you're not managing your money correctly, then you're maybe risking 50% per trade. When you lose that 50% and you're left with 50%, you now have to make 100% of what you now have to get back to where you were. So money management is key. It's very important. Fight emotions. This is something that a lot of traders struggle with. I myself struggled with emotions. I was emotionally connected to the money, because you remember it's your money. Excuse. So seeing it seeing it in negative, you're gonna it's gonna feel different to say the least. So you have to learn to control your emotions, not get overexcited when you see profits and maybe take it too early. Maybe the setup would have allowed you to make 2 or 3 times more than what you took. So not being emotionally connected is a key. You need to understand that before you become consistently profitable. And one way to fight your emotions is to not be connected to the charts, even if you're like a swing trader or you're a scalper. If you're a scalper and you're there every 15 minutes, you're in and out, you just need to come in every 15 minutes. You don't need to stay in for the full 15 minutes, because you're gonna see movement that might mess with your emotions and make you do something that at the time you might not have supposed to done something. Our next point is smart trading. And smart trading is basically talking about you understanding that you're not gonna get every setup the market gives you. You're not here to catch every movement. You just need to understand one set of movements, if I'm making sense. It's like, for example, in the charts here, somebody caught this move from there to there, and then somebody else caught this move from there to there, but there's no person out there that is trading this move from here to here, and also here to here, and here to here, and no, they analyze their strategy, whatever it is they're doing. It allows them to take maybe like a trade every now and again. For example, here I was analyzing this structure right here on gold, and because of my analyzation, I was able to catch this sell from in here, this falling channel right there, and I was able to catch the sell when it touched this resistance area all the way down there, but I wasn't able to catch it, maybe for example this buy here, or this buy here, or even this buy here. So the whole point about smart trading is just understanding your strategy, what you put the time into learning, what you put the time into perfecting. It might be just price action, it might be candlestick patterns, it might be you name it. If you're sorry about the noise in the background. If you're a fundamental trader and you trade based on news, if you're a trader who just based technical analysis, then you just stick to that. You cannot catch every single movement. So that's basically smart trading in a nutshell. Trading what you understand, and not because it looks good. Alright, and limit your trading also comes into smart trading, because you need to like set a target, whether it's daily or weekly, and then you divide it so you can meet a daily target. You need to set a target, whether it's 3 or 5 trades per day. It could be 10 trades per day if your account would allow it. The size of your account would allow 10 trades per day, and you can handle 10 trades per day, then just have your limit, because you don't want to be going over it, you don't want to be going under it, because some days if you go under it and that's your profitable day, but then you go over it and it's a day when the market isn't treating you so good, then you're gonna see some imbalance, and you're not gonna be able to like track your trading and make the necessary improvements to your strategy. So limiting your trading is very important. On the other side of things, we have knowledge, and on the knowledge the knowledge would be just basic understanding of these topics right here, which we'll touch on, like for example support and resistance. I touched on this in my previous videos. If you honestly, this is all very basic, so I wouldn't go too much into it to make the video too long. There are like hundreds of videos out there where you can understand everything you need to know about support and resistance. Resistance being an area of interest or an area where price reacts above the current price, and support being the area where price reacts below the current price. Support that supports the price, resistance that the price has to break through, so it's resisting. All right. Trend lines, very simple again. I think I had a few trend lines in the chart. I touched on this briefly also in my previous videos, but if you would like a more in-depth um, explanation of trend lines, then YouTube is your buddy. For example, this is a trend line right there. That's a trend line. This is a trend line. You can find trend lines everywhere. It's just connecting one point to another using a diagonal line. It's very, very simple. Most of these concepts are self-explanatory. Price action, again, for example, price action would be you analyzing the charts itself, the candles. For example, for pin bars, you would look here. This is a trend line. Let me just mark it up. I got this and I'm not using it. Alright, so this is a trend line right there, and price came down to touch this trend line. I don't mind my drawing skills. And what we notice is the price action gave us a pin. So it came down here, and then the candle went back up, leaving just a wick, and then it did the same thing on the next candle. So if you had back tested this strategy where you saw two wicks, a red candle, then a green candle, two wicks, and then you break up after a touch of a trend line, then you would have been in it for a buy. So that's basically price action. There are other examples, like for a sell, you're at the top of the trend line at the top, which is also at a resistance area, and you see something like this, which is the inverted pin bar, the not opposite of what we just saw, but this really is a pin bar. The candle that we just saw was not a pin bar, it just had a wick like this one here, but this is an actual pin bar. So if you had seen this and you trade based on price action, then you would have immediately entered this for a sell and write it all the way down here, maybe stay in and get even more profits there. So yeah, this price action pretty self-explanatory. Experience, this is in all caps because experience is by far the most important thing you need to understand before you become a consistently profitable trader. Experience is pretty self-explanatory. I don't think that I can explain experience because you really need to be in trading to understand. Like, for example, you can look at the charts and immediately identify structure because of experience. You would have been, for example, immediately been able to identify this structure right here. If you had the experience, you would have been able to identify this without even marking up the chart. Even though marking up the charts is something that experienced traders do, you would have been able to caught such a move because of experience. So I can't explain that much about it. And finally, we have market conditions. Like I was saying earlier, with fundamental trading and technical analysis, you have to have an understanding of both, because even though you may be a technical trader, having an understanding of what makes the market move, or you may understand like certain patterns, you may understand price is approaching to a resistance or approaching to a support area, but understand why, what is making price move, what is making or causing a reaction in the market, or what could possibly cause a reaction in the market. That would be like an edge over other traders to understand market conditions. So that would be it. That would conclude the video. We just needed to touch on the things you needed to understand before you're consistently profitable. If you don't understand any of the concepts, then you can simply, YouTube it. I was about to say Google, but you can search for the concepts on YouTube, or you can maybe leave something in the comments so I can know and maybe make a video on that further. But I just needed to make a short video on the concept so you'd understand better. Alright, until next time, this is GTFX signing out.